Welcome to Real Estate Radio Power Investing, an informative and engaging hour discussing everything you need to know about the world of real estate investing. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate Radio Power Investing, Tom K. Wilson.
Wonderful to have you back on Real Estate Radio Power Investing, where we empower you with the education to maximize your investing success. We're broadcasting from our Wilson Investment Properties headquarters in Silicon Valley. I'm Tom K. Wilson, your host for this weekly program on real estate investing. If you can't make the live show, you can catch our podcast on TomWilsonProperties.com or on iTunes or on YouTube. And you can go to TomWilsonProperties.com for our weekly newsletter on economics and real estate. You can get access to a lot of education information for investors. And you can also, by signing up, you can become part of our client base that gets access to our commercial and syndications and multifam, which often are offered at as little as $50,000 a share. And of course, we always welcome your questions. So we're delighted to have back with us today Beth Clifford, entrepreneur, international developer, investor. My gosh, we could go on all the things that she's been involved with: project manager, project director, contractor, owner's representative, construction manager. She's done quite a few things. She's a multinational developer, and her latest project that she's most involved with is hospitality, and we'll talk about that in a minute. And right now, I want to welcome back to with us, Beth. Thank you for being back.
Hey, Tom. It's great to be back, and love being on your show. So thank you so much.
Beth, you could tell everyone lots of nuts and bolts about things to do and not do that you've learned the hard way and successful way as well. But I really love that you really put a lot of focus on how to manage and your team and systems. We're going to get into that a little bit later, but right now I want to talk a little bit about a segment that Wilson Investment Properties hasn't been involved with personally yet, but we certainly are looking for opportunities in that direction, and that's hospitality. So, Beth, you've been focused. A lot of your work in recent years has been on building a new international brand in Belize.
Mm-hmm. I have. So
tell us a little bit about that.
You bet.
Yeah. Chat about that a little bit.
Yep. So you bet. So Tom, I've been involved in a lot of different asset classes in real estate, from retail, commercial, office, multifamily, like you had said, residential, et cetera. And one of the markets that I started to look at, which was, and you could see it with the genesis of Airbnb, that when you take a typical asset, which is a residence or a bed to put a head in, and when you shorten the length of the lease from a month or a year to a night, then the value or the potential income per the square footage increases dramatically. Dramatically can be up to 7 to 8 times the original what would have been on an annual or monthly lease value. So just goes to obviously it comes with additional costs. So we started to look at that asset class, and I started doing research into it and started looking at the big brands and looked at large companies that owned a lot of hospitality product, and both public, most of them public, and you start looking at their P&L statements, you start saying, wow, I can see why they're in the business. And this particularly became a driving force for us, and the prices of real estate had started going up, the cap rate started going down, then we were looking for an option that gave us a greater rate of return than some of the traditional 3 to 5, 7% that you're getting in the United States today. And so looking at typical profit and loss statements for hospitality industries, you'll see their gross profit, their gross operating profit, somewhere in the 20 to 30% profit margins. And so seemed like a good place to start looking. So if there's, I think that certainly for us warranted a secondary look at the market. And then, so once we understood that, where the profit came from and how it was generated, and then how to kind of go backwards into pro formas and build a product so that you can make sure that you can meet those types of financial goals, we started to go out and look for a market. And we looked not in the United States, we were looking for resort, because typically in the resort markets, they have an even higher rate of return. And so I could talk a little bit about how we chose our market. But I think that was the genesis of us getting into the hospitality industry. And so typically hospitality is trading anywhere from 9 to 14% depending on the markets. And so it's an attractive asset class inside of real estate investing.
We talk often to our listeners and our friends and client base about cycles, and I think many people are shocked at how different cycles are in different asset classes, and how cycles and classes within asset classes, A, B, C, D, and also in different markets. And they've the market, of course, is thousands of submarkets, and all of those are going at different phases. And the trick is to find ones that are giving better yields now, and that might not be the same one in 5 or 10 years, and probably wasn't the same one in the past. We've been focusing a lot on industrial in last year or two. We see a lot of research that REITs and other big hedge funds and so forth are looking for places to invest. Industrial is one of their top ones. But hospitality is, I think from your research, you feel that hospitality is one of those that's in a good part of the market cycle, don't you?
Mm-hmm. And it's always about, building a portfolio. So there isn't, a right answer. I don't believe for any, each person
Good
has
point.
their own right answer. And so, if I look at it like industrial, to me, it's like, it's a great product, but it's got a very long lease. And so it's almost like carrying like a municipal bond in your portfolio. It's probably not going to be the number one yield in your portfolio, but it's going to be a steady product. And so, typically your leases in industrial are going to be anywhere from 10 to you can get 40-year leases on industrial product. And so, and each of these things come with a different level. They come into, when you're looking at asset classes, it's about, what's it cost to get into the asset class? Each one of them has a kind of a price to get into it, right? And industrial is certainly a lower cost per square foot than a resort product is. I mean, when you look at one of the most recent projects that just got redone is a refurbishment of a Peninsula hotel in Paris, and the cost was $5 million US per key. So that's an extraordinary amount of money to go.
$5 million per. Did you say per key? Per head?
Per key.
Wow.
So per door, that's what they ended up. When you took the cost of the land, when you took the acquisition of the project, the acquisition of the property, and the total refurbishment of it, it came out to $5 million US per key. Now,
and I presume I presume they did that because the potential return was higher for that.
That's correct. And so it comes with a return, but that is also coming, like in the hospitality industry, the things we talk about, which isn't like monthly lease rates, or we talk about ADR, which is the average daily rate. And then we talk about RevPAR, which is the revenue per available room. And so those are the two metrics that most real estate investors in the hospitality asset class are going after. So when you've got a $5 million key, then they're in a asset that is trading at $10,000 a night. That's a totally different number, but start doing the numbers. So if you have a ADR at $10,000 a night, and then you've got a 70% occupancy, you just start to run the numbers, and you're like, this actually starts to make sense. So,
yeah, we can actually afford more than afford the PITI.
Yeah,
debt service. Yeah.
Correct. So it's all about that. I mean, that's kind of how you do the numbers. But we were talking a little bit about building a real estate portfolio and putting in stable, nice long-term leases and industrial and then multifamily, which is a more expensive asset class to get into, but a little bit higher rate of return. But your lease lengths are in the annual time frames, and then you go with hospitality, it's going to be even more expensive to get into that asset. Yet your lease term is one night, and we're not into hourly rentals. So just to let you know, so that's a joke. That's a joke. But so it's a one night basically term on the lease. And so you've got a higher cost of operation for it, of course. But you're that same square footage is generating an incredible amount of revenue for the square footage.
Mm-hmm. Well, I really like your message of it's common that folks want to seek what is the best investment, what is the best stock, and of course you're putting it's fairly risky to really make your whole portfolio just one kind of product, one kind of market, and there's no reason you can't have industrial, multifam, hospitality, all in your portfolio. And in fact, that gives you a wonderful breadth of exposure and potential returns.
Mm-hmm. And I was just thinking about this, which is, like a lot of methodologies that people go into multifam, they'll be looking at it and saying, can I get they'll look at it for their metric, which is, $1 per square foot for the year. And so then I look at it on our hospitality product, our revenue is running $1 per square foot per night. So you can see the kind of the difference in how the numbers run, correct? Because a lot of people will look at it and say, well, can I get the $1 to the purchase price for my rents and 1/100th, and that makes sense for a lot of people back of the envelope to start to look at a deal.
Mm-hmm. Yep, and it's certainly the numbers scale quite differently for these different asset classes. So like anything, you can't broad brush your criteria for getting into something without understanding that specific one and getting specific area that you're going into, whether it be a market or an asset class. Stay with us. We have Beth Clifford with us, very experienced international developer, entrepreneur, investor, going to talk to us more about how to select your team. Stay with us.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
We have with us today Beth Clifford, back on the program, who's a longtime entrepreneur, international developer, investor, and what probably a lot of people don't, maybe only met you in recent years, don't know is that you started off as largely a techie and a project manager and so forth in the technology industry. It's amazing how many of us started in a career like that and then migrated toward real estate. Talk to us a little bit about what you learned during that tenure of being in the tech world, how that kind of evolved into development projects, and then off on your own, Beth.
Yeah, great. So my background, was just came out of Wall Street, where I did a lot of systems work and development for large scale trading systems and back office systems. Helped design a computer system that traded and finalized all of the trades for over half of the federal debt for the United States. And so when you look at building and working in technology, sort of like real estate or development in a lot of ways, which is, number one, you have to clearly understand the problem that you're solving and the scope of the work that's required that you're doing. So, what am I trying to solve? How big is this problem? And breaking it into chunks that are definable, that need to be completed, putting them in order, putting the team together that needs to complete all of those things, following up on all of them, adding security around it, all of that. So, all of that, I think, was good methodology for the same thing that you do as a developer or you do in real estate, which is, you've got to have the same, what am I trying to do? What am I trying to invest in? What kind of portfolio am I putting together? What do I need to know? It's the scope of the information, the due diligence that I need to know or work to execute that I need to do. They're all the same basic methodologies or thought processes that you've got to go through. It's just, it's a different list of action items and a different list of team members and expertise that you're putting together. So rather than putting together Oracle consultants and, database people and coders and GUI interfaces and blah, 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 and hardware and all of that stuff, you just sort of trade all of that out into, plumbers and electricians and architects and lawyers and bankers and municipalities and everything else. And so I think it's, I was fortunate in that I had probably 15 years of doing management consulting and doing it into really a lot of different industries, from manufacturing to outsourced manufacturing to public utilities to mid-sized companies to working at a Fortune 50 company. And so, the business is the same everywhere. You have to get in order before you send an invoice. So, the business processes are all the same. How the industries put the things together, the products themselves, that's what really varies from company to company. So I'm just very fortunate in being able to witness a lot of best practices in a lot of different industries. But I think technology really gave me the opportunity to look at very large-scale problems and put together a cohesive, I would say, I think where my sweet spot is understanding and putting together the strategy and moving that into an executionable plan. That's kind of the world that I live in. And so I think that's probably the world for almost everybody lives in when you think about it. Whether you're a mother
my observation is that you've my observation is you got a lot of folks who are really great visionaries, but they don't have the same skills or desire to execute. So I think that's a probably a key bridge role, it sounds like, that you've played is carrying a strategy and concept into being able to execute it.
It is. You've listened to so many people now. It's kind of the word. If you read a lot of those current thought books, you read like Grit, or you listen to some of the other people who are out, on different podcasts about, what to do in business today, and they'll say execution is everything. And I really believe that. Thoughts are one thing, ideas are another, but the ability to complete a task is, never underestimate that. It's got to get done.
Best idea in the world isn't worth a darn if you can't carry it to the finish line. We have Beth Clifford with us today, a multi-billion-dollar international developer, entrepreneur, investor, and we will have her back in just a moment.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Beth Clifford with us today. Beth, you talked about in the last segment all the different skill sets that you developed when you were in high tech, and wound up using those to become a successful developer and investor in real estate. Would you say that a large percentage of people underestimate their generalist skill sets and their ability to transfer that to other things?
I would say yes. I think the most frequent question I have is, they'll say, well, I want to go get into real estate, or I want to be a developer. And they think there's a big road to go do it. And I am always like, you just go do it. It's like anything that you set your mind to, you can pretty much go do. I mean, it's always they say that necessity is the mother of invention. And the same is true. So when people will be like, well, do I need to go to Stanford and go get my construction management degree and then go work for a general contractor for 8 years? And I'm like, by the time you go learn all of that, the trade will change, the environment will change. I'm just like, look, go find something manageable that you can go put your arms around and go do.
Yep. And there's usually a gap. I think there's usually a gap between the classroom and the real world.
Absolutely. I hate to say it, but I mean, those who do, and those who can't teach in many ways. And so go out there and go do it. And, pick something easy. Go flip a house. I mean, in a lot of ways, everything that I do is in a micro. Mm-hmm. If you were to go take a micro case study, go buy a piece of real estate and flip it. And I would say just, go in, get the work done. You got to go put the trades in. The same thought process that you've got to go through to go build a $250 million project is pretty much inside of going and acquiring a property and doing a value add on it. And
I've had a few people tell me that they found it wasn't quite as easy as the ones they saw on TV.
Probably not. But, at the best case, you'll go do, and I tell them, look, budget it and look at the bottom line and then write the worst case of what you could lose on the deal. So I say, just like, what's the worst case that you could lose? And just, whatever. So let's say you could lose $100,000. Well, you're going to lose $100,000 and you're going to lose it in a year doing your flip versus spending 6 years battling it out at Stanford, and you're going to pay $250,000 to be over there. So,
and you'd better figure out how to do it on a small scale, because when you do it at your scale, you add a bunch of zeros to the end of that.
Yeah, and I attribute it back to, my undergraduate. I started my first 3 years in college with pre-med, and then I did a small little level internship and realized that I hated medicine. So what better way is there to go do it? At least at the end of it, if you lose, you lost $100,000, but you found out if you liked the work, and you found out, and if you did like it, you've got the momentum to go forward.
And who would have thought that switching to a BS in economics would apply so much to what your future career was going to be?
That's correct. Oh, yep.
Yeah, that's amazing. And then you got an MBA in entrepreneurial studies, and that was
I did.
That was certainly correlated well. By then, you kind of had a better feel for where you're headed, I presume.
Yeah, I did.
So,
and that was exciting.
Beth, sorry to interrupt you. We got to take a break here, and then we'll be right back for our last main segment. Stay with us here on Real Estate Radio Power Investing with Beth Clifford, entrepreneur, international developer, and investor. And we will be, this is Tom K. Wilson. We'll be back in just a moment. Stay with us.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
We are talking to Beth Clifford today about real estate developing, how you transition and carry skill sets with you from one part of your life to another part of your life, and it's and there's no substitute for learning by experience. But you don't have to be on a lifeboat on your own. You want to build a team around you. You want to have folks that you have mentor you and so forth that will help you get around the bases a lot faster. Let's talk a little bit about that, Beth, if you will. What's your approach and some of your philosophy about finding team members and mentors and so forth? How would you advise someone to do that?
One is, I think you start, I always start with what my vision is, like where am I going? So be very clear about, where I'm going and what I'm inviting people to. And so I think if you can have a good idea of what that looks like so that you can then share it with people and say, look, this is, I'm going to go flip a house here, and this is whatever that is, and this is what the outcome looks like, and this is why I want you to be engaged with it. You fit a critical piece of the team, and have them understand how critical and what role they play in the team. And then I build all relationships around win-win. So they understand how I win and how they win. And so I don't like to build up relationships around winning and around me winning and others losing. I think if you show everybody about how you're going to share with them the benefits and the results of what you're looking for, I think you'll be able to attract good talent. The other is to just you want to find people who really support your team. I always look at a couple of things. I want everybody in the room to be smarter than me. The thing I add to the value is I'm holding the vision and hopefully maybe some of the strategy together. Yet everybody else on the team is a whole lot smarter than I am. So, hire the best people you can. One of the things I'm known for saying is hire a team. Great talent will not cost you money. It's people will look at it and go, "Oh, that architect, is $200 an hour, but that one is $50 an hour." I'll go get my brother's, milkman's, dog sitter's friend's architect to go do the work for me. And it's like, and they're going to go, sweat equity it. And I always look at it and say, look, great talent saves you money. It doesn't cost you money. And it rarely, unless you get bad talent, that's expensive. But great talent who's on your mission, you can do work with and motivate them. And I just had an interesting call where I see so many people too, like sales and marketing, and even tradespeople. The market has changed to the point today where they're taking more risks than they used to before. It used to be people only wanted to work for a flat fee. But I see more and more people who come in and want to work on our teams, and they're willing to go put some sweat equity and also some of their profit on the line based on deliverables. So I think that's an important thing to look at, because then you've got somebody who's really in the game with you and has some skin in the game. The mortgage lender who comes to you and says, well, I need a $30,000 upfront fee for me to look at your deal. I'm like, that never happens. That's not going to happen with me. So that's one. The other is, we talk about this a lot. The way we hire or bring on talent is we do it on the 3 C's, which is, go through, I want to know what your character is first, commitment second, and your competency third. And those are what build long-term relationships. You can't make a dishonest person honest. You'll rue the day that you go for the person who maybe was the most competent but had no commitment to your project. So that means you're calling them every day to beat them to show up at work and do the thing that's the right thing. So the value comes when you really take the time to find people who have the character that you want in your business. It's so imperative. You can't do a good deal with a bad person. Just think about it in your life. The number of people that you may have felt like you needed to have them part of your team, and you kind of knew they weren't going to maybe be there or 100% for you, and you look back and you're like, that I knew the information was at the beginning of the relationship, but you chose not to look at it. So I think that's a critical one. Get the right people on your team. You can always train people for competency, and people who are passionate about your vision and see how they can win, those are the people who stay up night figuring out how they're going to go make it work. The other two, people without a commitment and without character, are not going to stay up at night thinking about how to make the whole team successful.
Based largely inspired by you, Beth. I've got a team now of several employees, and some of them had zero experience in real estate when I brought them on, and they are just so outstanding. They've learned so fast the competence part, and they brought with them a phenomenal work ethic and loyalty and desire to carry out my vision. It's just it's remarkable how valuable that is to focus on the person more than what skills they bring.
Yeah, because these things, today in the internet, you can learn just about anything in about a month on the internet if you really wanted to. I mean, I'm not talking about open heart surgery, but if you want to go out and learn specific tactics, if not, I mean, you can go on Fiverr and get somebody to go get specific things. I mean, I completely agree with you, Tom. It's not about the competency. It's about their character.
No. Well, thank you for that gift that I've used to help build my team up to one that I'm so proud of, and indeed smarter than I am, and inspire me every day. So that's great when you have a team that inspires the entrepreneur, isn't it? We'll be back with you, Beth, for a wrap up in just a second. Stay with us.
Welcome back to Real Estate Radio Power Investing. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, visit TomWilsonProperties.com. That's TomWilsonProperties.com. Again, your host for today's edition of Real Estate Radio Power Investing, Tom K. Wilson.
Well, it's great having Beth back with us today. She's been out here to Silicon Valley, which is where she did some of her earlier career. Another techie going down the real estate path. Beth, I want to wrap up with a question about you're a busy person. I think most entrepreneurs, that can be said of, but you're very busy. You got lots of different projects going on, and really one of the first international brand in a new country, Belize, and hospitality, and yet you keep a lot other things going too. You advise businesses and do things like take time to be on our program. Thank you, and have a wonderful family life. How do you balance and handle all that?
I found that the success for me is because I've got so many things that I need to go do, is that I time block myself. And so I look at my week and I break it into blocks. And so, Tuesday is meeting day. And so it's, and another day, it's where I'm traveling. I have big blocks, and I schedule myself into the places that I am to do the type of work that I need to go do. And so, and I look at my business too as being, I don't even know how many companies I own and manage now, but it's over 15. And so I always am scheduling myself based on, am I going to be working on the business or working in the business? And those are two very different disciplines. And so I am an active thinker. I'm a morning person. I wake up every day and I invest in myself first. And so I read for at least a half an hour every morning when my brain is the most lucid in the morning. And that's when I do, and I spend that time investing in me, reading something that is a benefit to me and will ultimately be beneficial, I hope, to those I come in contact throughout the day. And then from there, it's really about keeping to a schedule, time blocking, and delegating. It's about building a big bench and a deep bench that you invest in, give them as much information as you can, share with them, follow up with them, encourage them, acknowledge them. Care and feeding of your bench and your team is mandatory. And then that frees you up to go do the things that I've got to go do so that I can give back, hopefully become better. I want to learn something every day. Just keeping those front in mind to me. That's, just being present for the people around me. So I guess, I don't know, it doesn't sound very, very mystical or magical, but it's just, part of it is just staying in the rails and also saying no to things, which is critical too, which is, not getting involved in things that I can't really add value to.
Okay, good stuff, Beth. Wonderful wrap up. Thank you so much for being a business friend and a personal friend, and for taking the time to share your thoughts and some of the things that have helped you be successful. Beth Clifford, entrepreneur, international developer, investor, and friend. So nice to have her back. This is go to TomWilsonProperties.com, sign up for our newsletter, get you access to our syndication opportunities that we have, and there's a lot of education information on there as well. So thanks for being with us today, Beth, and thank you for our listeners for being with us. And remember, the only thing that matters is what you do next.